What is life insurance? What do all of these words mean? How many policies are there? If you had all of these questions about life insurance, then watch this explainer video and you'll find out. Hi, I'm Niyu and welcome to our channel Let's Make You Rich, because getting rich isn't rocket science. Simplifying personal finance is our mission. To support us, please subscribe to our YouTube channel and press the bell icon to receive notifications. I asked you all in a community post what topic you wanted to see next, and an overwhelming majority selected this. You wanted to know the different types of life insurance, and that's what this video is going to talk about. That's why this is video 1 in our Life Insurance Simplified series. We'll cover life insurance terms you must know, what life insurance policy to pick, in-depth videos on term insurance, tax benefits of insurance, who should take insurance, etc. All these videos will help you understand life insurance as a whole and make smarter decisions. I'm creating a playlist for this and all future videos will be added to this playlist. Start थोड़ा simple करते हैं. What is life insurance? When it comes to insurance, मुझे ऐसे लगता है that I want to protect my family. I want them to get some money when I die so that they don't have to struggle. And इसके सामने an insurance company comes and says, don't worry, I'll take the risk. I'll pay your family a certain sum when you die. So you don't have to worry about anything. But because I'm taking this risk, you pay me a small sum of money. This is called premium. And that's life insurance in a nutshell. In short, a life insurance company makes a bet on you being alive while you make a provision in case you die. Now, what are the different types of life insurance? So when I searched for the different types of life insurance policies, this is what I found. Term life insurance, whole life insurance, endowment life insurance, money back insurance, savings and retirement insurance plans, retirement insurance, ULIP life insurance, child insurance policy. Arey baap re, itne sare. Now when we see so many different terms, we think life insurance is complicated. But today, let's simplify it. Before we start, this is not a sponsored video. I'm just sharing my honest opinion with you so that you understand life insurance better. I'm going to have to refer to some tools and take some names of companies, but that doesn't mean I'm recommending them to you. So I've made a chart for you to understand life insurance in a simple way. I've mainly categorized them into two different parts. Policies where you don't get any money back and policies where you get some money back. Policies where you don't get any money back are called pure life insurance, and those where you get money back can be divided into two categories. Now, how will the insurance company decide how much money you're going to get back? That depends on what investments they make with your money. So depending on where the insurance company makes the investment, we further categorize this into two different parts: market linked plans and guaranteed plans. And we're going to cover all these three different categories in this video. Every insurance company takes a risk when they agree to insure your life. When we pay only for this risk, it's called pure life insurance. And as you're not going to get any money back, there are no investments that are made in your name. In short, you're not paying for any investment. That's why in such policies, you can get a cover of 1 crore rupees by paying a premium as low as 10,000 or 12,000 rupees a year. This is called a term insurance because it covers you for a particular term or a period of time. So let's look at term insurance quotes for Abhi and me. So as you can see, I put in a few parameters. We've decided a life cover of 1 crore rupees and we're going to be covered till we're 85 years, and here are the quotes for Abhi. So if he opts for ICICI, the premium is 22,000, HDFC it's 15,000, Max Life it's 14,000, close to 15,000. Now these are the quotes, or this is the premium that Abhi will have to pay every single year to get a cover of 1 crore rupees till the age of 85. So over here, Abhi is covered till the age of 85, which means the policy will stretch till the time he's 85 years. Let's look at the quotes for me. So for me, the quotes appear to be slightly cheaper than those of Abhi, even though I'm 30 years old and Abhi is 27 years. So the quotes for women are cheaper than the quotes for men. Factors like your age, gender, income, and your place of residence determine how much cover you'll get and how much premium you have to pay. If you have any existing health conditions or you're a smoker, then your premium will be higher. Term insurance premiums increase as your age increases. So as you can see here, it's reminding Abhi to buy term insurance before 6 September or else the yearly premium will increase. Now once the premium is fixed for a particular term, the insurance company doesn't change it till the term is over. So if you buy an insurance cover of 1 crore rupees at 10,000 rupees per year, that means you'll have to pay this amount every year till the term is over. Of course, the tax amount may change, but the base amount remains the same. There is another option to increase your cover to 99 years. This is called whole life insurance. But as you can see, when I choose that option, the premium amounts go up drastically. So I have to give it a little bit of thought whether I want to opt for this or not. One more thing. In term insurance, many policies have a step-up option. This means you can increase your life cover as you reach certain milestones, like getting married, the birth of the first child, birth of the second child, and so on. So you initially start with a smaller cover, and as you hit these milestones, the amount of cover keeps increasing in proportion to the number of dependents that you may have. So here you can grow your cover as your family grows as well. And that's why many people recommend getting term insurance as early as possible so that you can pay a lower premium and get a higher sum assured. But how to select the best insurance policy, what policy is good for you, we'll cover that in a future video. For now, we'll move on to the next category of life insurance, and that's policies where you get your money back. I think every family will have some insurance plan like this, जहाँ पे कुछ ना कुछ तो return मिलता है. In such sort of policies, the insurance company provides risk coverage plus returns. So the amount that you pay the insurance company every year has two components. It has an insurance component that covers the risk of insuring you, and it has an investment component that generates a return. And in these type of insurance policies, the company will pay you or your family. In case of survival, they'll pay you the amount. In case of death, they'll pay your family the amount. The payment made when the policy matures is called a maturity benefit. The basic cover that the policy pays in case of death is called sum assured or the life cover. Remember these terms. In guaranteed plans, your investments are not linked to the market. They have no relation to how the market's going to move. In the next 15 to 20 years, suppose the market performs very well, your investment may not perform at the same level. On the other hand, if the market crashes, then it's not necessary that your investment will crash as well. In short, your investment has no relationship to the market. It's like a thali where you know exactly what you're going to get because the insurance company has guaranteed that to you. There are no surprises. It's not linked to the market because you're not directly making the investments. The insurance company is making these investments for you. So you don't exactly know कि पैसा कहाँ जा रहा है. Endowment का मतलब है gift. So the name literally means it's an asset or a gift for your family. In an endowment plan, the maturity benefit is fixed. So you know exactly how much you're going to get when the policy matures. What I mean by maturity benefit is, suppose you are alive when the policy matures, it will pay you a maturity benefit. Okay, now let's take a look at guaranteed plans, that's endowment plans, and let's see the sort of coverage that I'm getting and how much I have to pay for it. Remember, these plans combine both insurance and investment, so we'll see how much I have to pay and what I get in return. Now this is something for me, so I've put in my details, Niyati 30 years old. So assume I have to invest 5,000 rupees every month for 10 years, then these are the sort of options I'm getting. Let's check out the first plan, ICICI Guaranteed Income for Tomorrow. The insurance company says they're going to give you exactly that much. That's why they use the word guaranteed. So that's how you can identify these are endowment plans. Now if you look at it, I will have to pay 6 lakhs, but my life cover here is also 6 lakhs. So in the unfortunate event that I die and I choose this plan, then my family will only get 6 lakh rupees. And I've in one way or the other paid that much as premium to the insurance company already. So it's like मेरा ही पैसा वो मुझे वापस लौटा रहे हैं. Now we're going to check out the returns that we actually get in this plan. So in this ICICI Pru Guaranteed Income Plan, I have to invest 5,000 per month for 10 years. That's 60,000 a year and 6 lakh rupees in total. And I get a guaranteed income of 9,505 rupees for 10 years after the policy is over. So this policy says it's giving me a total return of 11.41 lakhs. For which I have paid 6 lakh rupees right now. You paid 6 lakh rupees to the insurance company. In the unfortunate event that you die, they'll pay 6 lakh rupees to your family. And if you survive, you'll get 11.4 lakhs in the form of 9,000 rupees monthly income that comes to you. मनी बैक प्लान्स आर वेरी सिमिलर टू एंडोमेंट प्लान्स, लेकिन उसका जो रिटर्न होता है वो आपको एंड में नहीं, ड्यूरिंग द पॉलिसी टर्म बीच बीच में मिलता रहता है. लेट मी एक्सप्लेन इट यू विद द हेल्प ऑफ अ डायग्राम. सो लेट्स अस्यूम दैट यू स्टार्टेड अ पॉलिसी इन द ईयर 2020 एंड द पॉलिसी मैच्योर्स इन द ईयर 2040 एंड यू पे अ प्रीमियम ऑफ 5,000 rupees every year, and you're supposed to get 6 lakh rupees from the insurance company at the end of it. What's going to happen is they'll decide at the end of the 5th year they want to pay you 10% or 60,000. So you'll get 60,000 rupees at the end of the 5th year, you'll get 60,000 rupees at the end of the 10th year, and you'll get 60,000 rupees at the end of the 15th year. तो आपको total 1,80,000 वापस मिल चुके हैं from the company, and whatever amount is left pending or whatever is balanced, that's 4,20,000, is what it will pay to you in the year 2040. Now these are just hypothetical examples For the actual money back plans, you'll have to refer to the policy document. This was just an example, but I hope you understood. Linked insurance plans are called that because their returns somewhat follow the market. The name of this kind of insurance plan is called a unit linked insurance plan, or ULIPs. A ULIP invests your money in different funds that are linked to the market. Because it's linked to the market, your fund value will grow based on how much the market grows, or it will come down based on how much the market crashes. Now, an insurance company will give you different funds that you can invest in, like for example an equity fund, a bond fund, and you need to decide what portion of your premium gets allocated to which fund. So a lot of people choose ULIP because they think कि इसमें market में investment हो रहा है, so they'll earn as much as the market is growing, and they also get insurance at the same time. So if anything happens to them, they'll get some money in the form of sum assured, and they'll also be able to make investments in the market at the same time. A lot of people think that ULIPs are better than mutual funds because in ULIP you get market linked returns and you get insurance as well, and you get a tax benefit. But there are a few things that you must consider. So if you look at the life cover that you get in ULIP plans on places like Policy Bazaar, you will see that even if you pay 60,000, 70,000 premium a year, the life cover is not very high. It's usually 10 times the premium that you pay every year. So here I'm on Policy Bazaar and I've gone to ULIP plans where I have to pay 5,000 rupees for 10 years. And if you see in all of these plans, let me click the first one, say Tata AIA, to see how much my family will get in the unfortunate event that I don't survive. The life cover that I'm going to get if I pay 60,000 rupees a year is 6,16,500. So even though I'm paying so much of premium, मुझे cover सिर्फ 6 लाख ही मिल रहा है. Now let's come to the other important part, how much you actually have to pay in the form of charges. In mutual funds, you have a fixed charge that you have to pay, जो आपको पहले से ही पता होता है. That's called the expense ratio. For ULIPs, you have multiple different expenses. Some examples of expenses are policy administration charge, fund management charge, switch charges, partial withdrawal charges, mortality charge. Now the law restricts fund management charges to a maximum of 1.35%. Switch charges are charges that the insurance company charges you in case you switch from one fund to the other fund during the year. So ULIPs as an instrument have a lock-in period of 5 years. This means that आपको 5 साल तक continuously premium देना ही पड़ेगा. If you decide in the 3rd year that you want to stop this, you want to stop the policy, you want to stop paying premium to the insurance company, what's going to happen is that your investments won't continue in the stock market. They'll go into something that's called a discontinued fund. As per law, the insurance company has to pay you a minimum of 4% for anything that's in the discontinued fund. तो वो आपको उतना ही देगी, उससे ज़्यादा नहीं देगी. On the other hand, for mutual funds, if tomorrow you decide I don't have enough money, I want to stop my SIP, you can stop it. The mutual fund will continue to keep your investments unless you go to them and say मुझे पैसा चाहिए, I want to redeem my investment. After you finish 5 years, you can surrender the policy and exit the ULIP. But if you do anything before 5 years, you actually end up losing money. क्योंकि the money that goes into the discontinued fund doesn't come to you immediately. It will come to you after 5 years are over. So you're actually kind of losing money when you choose to stop a ULIP before 5 years. ULIPs are market linked. So in case the fund value is higher on maturity or in case of death, fund value is paid out. But if the fund value is lower or in case the market crashes, then the sum assured is paid out. And the policy document usually specifies what the sum assured or your life cover is.
So Niyu, what did we learn today?
We learned what is pure life insurance. We learned about endowment and money back policies. We learned what are ULIPs or unit linked insurance plans. Life insurance is just one of the ways we can protect our family in case of any emergency in the future. और ये काफी important decision होता है, and there are a lot of factors that are involved in this. And that's why this is video 1 in our life insurance simplified series. In our future videos, we'll decode more aspects of life insurance and we'll add them to a playlist. So be sure to check out the channel in the future for more videos on life insurance. It's possible for everyone to get rich because it's not rocket science. It's a set of simple steps that everyone can take. It's a process. And in this video, we decoded what life insurance is and we learned about the different life insurance policies. Thank you so much for watching this video and we'll see you next week with something new.